What's going on, everybody? It's your boy C-Zar, and in this video, I would like to discuss the aftermath of the Federal Reserve press conference that Jerome Powell held regarding the FOMC meeting and what they decided to do, right? Everybody's talking about the 25 basis points rate cut, which is awesome. Some people are discouraged, some people are encouraged. It's exactly what we've expected, right? Again, I was saying this earlier today, and I've said this before. Jerome Powell has mentioned that September would be the month, and very transparently has said that September was the month that they were considering for rate cuts this year, for the first rate cuts this year. They said that back in May. Okay, they said that back in May, and they've continued to say that ever since. This isn't something new as of the Jackson Hole event, but everybody was made aware of it by then. A lot of people on X.com, and I'm reiterating some stuff that I said in the last video, but you guys, there's some juicy stuff that we're going to go over in this video. I promise you. Just wait. You're going to be very excited if you're investing in crypto, if you're investing in stocks, whatever it is. You're going to be a very happy clam. I don't know. You're going to be in a good mood after this video, if you're not already in a good mood, right? But I very much believe that we're going to shed some light on things that Jerome Powell said after he was done speaking, and whenever he was answering questions. There's some key things that I think were just obvious that he is dovish on the markets right now. Okay, we're going to go over that in a second, but I want to complete this thought here that that a lot of people on X.com were saying, who's ready for 300 basis points cut? Who's ready for 150 basis points to be cut, right? And I've told you guys time and time again that it doesn't matter what direction, whether we hike rates, whether we decrease rates, whatever it is, that doesn't matter. It matters how we do it, right? So how the Fed does it. If they make drastic changes in a short amount of time, whether it's hiking rates or lowering rates, it's bad. If they do it gradually, one way or another, it's good. Right? It's good. Even stagnant is good, because that means there's no action that's needing to be taken place, right? Whenever they make drastic changes, a lot of people are discouraged. Only 25 basis points. It's been since November. You haven't cut any rates. We're overdue for rate cuts. You only cut 25 basis points. That's the least you could do, Jerome. It literally is the least you could do. That's actually a good thing. It's actually a really good thing. And there's some implications to this. We're going to go over in this video here. By the end of it, you'll see what I mean. Why I think this is the opening of a path. This is the beginning, the commencement of a journey down this path of future rate cuts that are to come. He says it himself. So I'm going to play a little clip here. I'm going to play a couple clips, but we're going to play a clip here. You can hear it from the horse's mouth himself. He'll tell you exactly what I just told you in his own words, that when they make dramatic changes to the rate cuts, to the interest rates, it's because action needs to be taking place, because something's wrong in the markets. They need to create balance. They need to stabilize things. And anytime that happens in the economy, or if they need to balance the economy or help the economy out in whatever way they deem fit, whether it's through serious hikes or serious cuts, the markets react negatively to that, because that means that there's something wrong, that there's not a balance in the markets, and that there's something wrong, right? And he'll say this himself. I'm going to mute myself 1 second here. Let me get everything set up. Okay, hold on. Let's see. We're going to blow this screen up a little bit. Yes, there we go. And I'm going to mute myself. We'll play this, okay?
Suggests that we should be moving in the direction of neutral, and that's what we did today.
Under what circumstances would a larger than 25 basis points rate cut be warranted, and how seriously was that option entertained at your meeting this week?
There wasn't widespread support at all for a 50 basis point cut today. You know, I think we've done very large rate hikes and very large rate cuts in the last 5 years, and you tend to do those at a time when you feel that policy is out of place and needs to move quickly to a new place. That's not at all what I feel certainly now. I feel like our policy has been doing the right thing so far this year. I think we were right to wait and see how tariffs and inflation and the labor market evolved. I think we're now reacting to the much lower level of job creation and other evidence of softening in the labor market, and saying, well, those risks are maybe not fully balanced, but moving in the direction of balance now. And so that warrants a change in policy.
Okay, so you guys heard him say it there, right? Like in the past, whenever more serious alterations to the interest rates were needed, it's because there was something they needed to take action. He literally said it himself. Where here there was a slight softening in the labor markets, but nothing too dramatic. He even said that things are balancing out and things are looking good. He had actually very positive tone to some quote unquote negative news with the labor markets, and that's his justification for interest rates being cut. But really, they were going to cut it with or without labor markets softening. They were going to cut these interest rates regardless. but he said it himself. So just understand, you've got the head guy of the SEC, somebody who's I think clearly intelligent and knows what he's doing, who deserves to be in his position that he's in, who's telling you the exact same thing that I was just saying, which is that slow and low on these rate cuts is the way to go, right? It's actually better that way. There's one more clip that I want to play for you guys here, and I want to dissect this. This is the really what I think. This is the really bullish thing here. This is the thing that got me really excited, and it's truly the inspiration behind this video. So I'm gonna play that for you here in just a second. I want to mute my big screen. Let's see. Here we are. Okay, cool, good. And then I'm gonna mute my mic, and we'll play this right now. All right.
Thanks. Howard Schneider with Reuters. So, as you mentioned a minute ago, some margins of the job market would suggest that the slide's already happening. Black unemployment rate in August was above 7%, declining work week, difficulty among college graduates finding work, rising youth unemployment. Why do you think a quarter percentage point now is going to arrest that?
Well, I didn't say that I thought a quarter point would make a huge difference to the economy, but you've got to look at the whole path of rates, right? And the market's has already been baking in expectations. I mean, our market works through expectations, right? So I think our policy path really does matter. And I think it's important that we use our tools to support the labor market when we do see signs like that. I did mention that, you see minority unemployment going up, you see younger people who are more vulnerable economically, more susceptible to economic cycles. That's one of the reasons, in addition to just overall lower payroll job creation, that shows you that at the margin, the labor market is weakening. I would also point to labor force participation. Some part of the significant decline in labor force participation over the last year has probably been cyclical in nature rather than just the usual aging process. So we put all those together, and we see that the labor market is softening, and we don't need it to soften anymore, don't want it to. So we use our tools, and it starts with a 25 basis point rate cut, but the market's also pricing in a rate path. I'm not blessing what the market's doing at all. I'm just saying it's not just one action.
All right, guys, so you heard that, right? He literally said it multiple times. And if I'm going to get rid of my face so you can see the time frame here, but if you want to watch this video itself, you go to the Federal Reserve website, the FOMC press conference, September 17th, 2025. It's like 27 minutes in. It's this guy. I forget what his name is, Howard or something like that. Schneider, I think, is his name. We got the same hairline. That's the guy. That's my boy. That's what I'm gonna look like whenever I get old and gray. He's a good-looking man. Damn it. Anyways, anyways, you guys. He says it himself that the path of what this means, the path that we're set on. He literally says it without saying it that there will be more rate cuts later this year. And this isn't the first time we've heard this, right? It's further confirmation. I'm glad he said it, because sometimes things do change, and they're very transparent when things change. But he said this back in Jackson Hole, and even I think the FOMC meeting before that, that they plan on doing multiple rate cuts throughout this year, going into the end of this year, starting in September and going into the end of this year. Each FOMC meeting will have rate cuts. So again, 25 basis points now. Howard asks, why 25 basis points? That's not significant. He's like, well, the 25 basis points is not significant. You're right. He's like, but what is significant is the path that we're on to further rate cuts. He's like, I'm not going to bless the markets. He's like, but this is, the markets are anticipating what this means, and we're going to play off of that. And that's literally what he said. I mean, I'm paraphrasing. It's not verbatim, but I think that's pretty exciting stuff. If you're not excited about that, I don't know what to tell you. Maybe it's just jargon, but let me tell you what the jargon means. I've said it already. I'll say it again. There will be more rate cuts, and at a slow, soft pace. If you watch the whole question answering interview, he goes on at various times to say that he believes that there is balance in the markets, that they don't need Federal Reserve intervention. They want to bring the rates down, but they want to do it right. That should get you excited. That should get any savvy investor excited. The Federal Reserve is literally stating that they think the economy is healthy. when they say things like that. It's so healthy that the intervention needed by the Federal Reserve is minimal to none. That's why there haven't been rate cuts since November last year. That's why, as of now and going further, they're going to lower it. They wanted to lower, but they took a huge pause because they wanted to see if the markets were stable. Donald Trump came in, shook things up with the tariffs. You want to say it's political. Maybe it was, maybe it wasn't. But I think regardless of what it was, what it is right now is a path forward to more rate cuts. And we just heard that happen himself. So don't be surprised if next month we get another 25%. Don't be surprised if well, I think it's actually November is the next FOMC. Don't be surprised if we get 2 more rate cuts by the end of the year, and probably even going into January. Rate cuts happen if interest rates are lower. The big dogs take out loans at a lower cost to them. That basically says, hey, it's time to take out loans. It's time to leverage your money, and it's risk on season. Okay, the last piece of this puzzle will be when the Fed stops offloading their balance sheet. They say that they're offloading at a modest rate, which is nice. It's dovish, but they are still offloading. When they stop offloading and then eventually transition to adding to their balance sheet instead of taking out things from their balance sheet, that'll be whenever things are really, really bullish. But that probably won't happen this cycle. That might be reserved for next cycle. But I think that the most bullish point in this cycle, you might hear them say things like they're no longer offloading their balance sheet. They're probably just waiting. They're just chilling. You know what I mean? Anyways, I hope you guys enjoyed the video. If you did, hit the like button, subscribe. Thank you all for being here. I'm jacked, man. Jerome Powell literally, I think, he said he's not blessing the markets. I feel like we've been blessed. I genuinely think, and you hear him say it, I'm not blessing the markets, but that's him saying, I know this sounds good, but, you know, he's just covering his ass saying that. But I definitely think it sounds good. I don't know how else to make it, so I'm just going to end the video there. Thank you all for being here. Hit the like button, subscribe. I'll see you on the next one, okay? Take care of yourselves. Bye-bye.